Alright, so now I'm in the ThinkorSwim charting section, and from here I can look at some charts and try to figure out where I think the stock might be going. So to access, just come up here and click the charts tab, and let's see, let's take a look at Apple. And these are bar charts, so you can see here there is green and red bars. And let's just look at one, for example, say this red one right here. So this indicates the stock was down on the day, and the top line right here, kind of where it's thick, this indicates where it opened. This thin line that goes up and then stops, that indicates right here the high on the day. Likewise, this thin line on the very bottom right here indicates the low on the day, and this line right here, the thick line at the bottom, indicates where the stock closed. And same thing on the green ones. So here we have open, the low on the day, the high on the day, and then eventually where it closed. And when we come up here, there's nothing really special going on. This is just a standard chart, and I can set it to different days. So I believe this is a 1-year chart right now, and it goes either each bar is 1 day, so that's what happened in a day's time. I can change this. Here's a 5-day chart every 5 minutes, and we can go to a 3-year chart. Each one of these is a week. But let's just go back to the 1-day, 1-year chart. Alright, so I like to load studies. So there's different studies. Now when you come here originally, there's going to be the Bollinger Band study in here. And this is a great study. So Bollinger Bands show 2 standard deviations away from the simple moving average. Because the standard deviation measures volatility, when the market becomes more volatile, there's an upper and lower widening bands. And when it becomes less volatile, these bands contract. So you're going to have this line up here. This is the upper band of 2 standard deviations, and this is the lower band. And you can see volatility must have increased right here because the band widens, and then it narrowed. So this is a good one. And you can see usually when a stock gets outside the Bollinger Bands, that usually means it's going to pull back in. They don't stay outside for very long. So you can see here we had it outside, then it pulled back in. It just got outside, pulled back in, outside, pulled back in. Now it got outside on the lower part, pulled back in, and can pretty much continued on that path. Now also I like to add some other studies, and to do that I can go up here to studies, add study, and let's do all studies, and let's add, let's see, implied volatility. Now, implied volatility is a good one. This generally increases when the stock market goes down, and this is because there's uncertainty in the stock market. Overall, volatility is just a way to measure expected fluctuations in the market and is one of the key elements of pricing options. The higher the volatility, the higher the option price will be, and this is just based on the probability of a large swing in the stock. So here you can see Apple currently has a volatility of 22, and if we change stocks, let me see, so Apple's 22. If we went to like Tesla, it's going to be a lot more. So we can see Tesla is currently 43, because that one moves around a lot, and we can see currently it's popped out of the Bollinger Bands here, and now it's kind of back in, but still at the top. Tesla's a dangerous one, but up around 305. It's probably not going too much higher. It's probably going to make its way back here, but you never know. And if I like the study, I can go ahead and save it. So I go up to studies, save study set, and let's just keep it under Bollinger Bands. So now if I come up here and I hit studies, load study, Bollinger Bands, this is what's going to come up now with the implied volatility. Okay, so now let's come up here to studies. let's go ahead and remove all studies. And that brings me back to this page. So some other studies I'd like to add. Let's check out some other ones. So there's some good ones in here. So let's go to add study, all studies, and RSI is a good one. So there we go, RSI. So what RSI is, it's a quality tool when trying to identify a general trend in the stock. It can be used to see which way the momentum is going, but also used when considering to see if a stock is overbought or oversold. If the RSI is over 70, that generally indicates it's been overbought, but if it falls below 30, then that generally indicates oversold. However, it's always smart to compare that with the traditional levels. So you can see here, we're in Tesla right now. So you can see it's oversold here. And if you come back to the chart, you can see it went back up after that. Kind of stayed in a range. Overbought here, but it looks like it stayed overbought for quite some time. This is why you want to check momentum. The momentum was definitely going up here. And then it kind of came back down, and along with it, the price. And then back up. And another tool I like to use with RSI is the percent R. So if I add another study to it, percent R, now we can add this to it as well. And along with RSI, percent R is a good momentum indicator to see if something has been overbought or oversold. It's just another tool so we can help as an investor establish a good entry and exit point. And you can see they're very similar. Usually with percent R, the lines are 20 and 80. And they match up pretty closely, but you can see where momentum is headed and if something is overbought or oversold. And if I like this study, let's say I want to keep this one, I can save study set, and let's just call this one RSI. So now I have a couple studies in here. I got Bollinger Bands, which is this one. It's got implied volatility. And I can load another study, RSI, and it'll bring up this one that has these charts. So let's remove all studies. And there's an endless amount of studies that are in ThinkorSwim. And you can just look through them all. These are some of the main ones listed here. And all studies, you could go through and find out some other ones that are in here. Another one I like is on balance volume, and we just pulled that up here. And on balance volume is just another thing to predict where you think the stock might go. If the market closes higher than yesterday, then the current on balance volume will be equal to the previous day's total plus today's volume. And if it's less, you subtract the on balance volume from the previous day. So you can see here, people were selling the stock here. Volume was going down, now volume is going up. And this can help you see where the smart money is going. If you see the stock is staying at the same price, but the on-balance volume is going down, you can bet institutional investors are selling while the less sophisticated investors are buying. And this could be a good indication that the stock is actually going to eventually catch up to that and go down. And so let's save this one too. Studies, I like this one. Save study stat. I'll call this on balance volume. So now whenever I want to go up to see one of my studies that I use often, I can just do study set and load the study. And there's also trend lines you can draw. If I just click, I can see, if there's a trend I want to see what's happening. So there's one in here. Like that. And to do that, you just right click and then left click. And that's how you use the charting tools.